Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, Nigel. Nigel, hi. Morning.
Well, morning, Prashant. You know, overnight, the news that was anticipated has finally come about.
Yep.
We have given the enemy the response. And in fact, from a market perspective, we look on from here on, obviously. And the way the Indian military has responded, and they've said it's targeted, it's measured, and it's, de-escalatory in nature. I think that holds the key.
Jawab de diya hai. And now I think let's look ahead in terms of what really comes through. So for those who are joining us, and we started, at about 7:30. Actually, we started even earlier, about 7. But for those of you who are joining us now, the Indian Armed Forces launched Operation Sindoor earlier this morning, hitting terrorist infrastructure in Pakistan and Pakistan-occupied Jammu and Kashmir. Focused strikes were carried out on 9 terrorist infrastructure sites, including Bahawalpur, which is the headquarters of Jaish-e-Mohammed. The Indian Armed Forces have also decimated terror camps at Muridki, the headquarters of Lashkar-e-Taiba, and Hafiz Saeed's Jamaat-e-ud-Dawa. According to the Indian Army, no Pak military facility has been targeted. Later today, Prime Minister Modi is going to chair a meeting of the Cabinet Committee on Security today at 11 a.m., while the Indian Army will also hold a press conference at 10 a.m. Today. Let's actually, this is a story which we will continue to track. The GIFT Nifty at the bottom of the screen gives you an indication of how things are likely to start up. But for now, these are the latest developments which actually started in the wee hours of the morning. Rajiv Bhatia is former ambassador, South Africa, and distinguished fellow, Gateway House. He's with us. Thanks very much, sir, for joining us. Good to have you here. It's an important day. The response has finally come through, Mr. Bhatia. What do you make of it? And, will the forces here, the Defense Ministry has made it very clear, they are targeted, not aimed at civilians, and, of course, aimed at taking out terrorist infrastructure in POK and Pakistan. Road ahead, Mr. Bhatia.
Thank you very much. There are 3 facets I would like to highlight very briefly. First, as an Indian citizen, I can say that every Indian citizen is filled with enthusiasm and hope that our government is able to deliver justice when justice is required. This is a moment of some pride, but not bravado. It shows that the government does what it says. The second facet, as a diplomat, as a former diplomat, I can say that our international diplomacy will receive much kudos around the world, deep appreciation that India is a patient country. India fights for its causes. But when purely diplomatic, peaceful means fail, then it has the national determination to move on to something more. And at the same time, I think the world would realize that, as you said earlier, it's a very calibrated, planned, thoughtful response. It has taken 15 days for us to build this up and deliver it. And so this is something very significant. And thirdly, as a scholar of the Indian foreign policy, I can say that the whole response is being done in a very controlled manner. I think, if I'm not mistaken, there's going to be a briefing very shortly from the government, and then perhaps the Prime Minister is going to address the nation. And I think the point that probably would be made is that India is determined to protect the security and interests of its citizens. It expects the world to understand India's rationale and
Sure.
support its fight against international terrorism.
Sure, sir. Thank you so much for joining us this morning. Mr. Bhatia, in your many years as a foreign services professional, I think the world is now watching to see what the Pakistan response is going to be like. And we've seen tweets and posts from a lot of foreign dignitaries, including the Secretary of State, including the US State Department, actually, saying that we urge both sides to de-escalate. Do you think global powers will be able to prevail on Pakistan at all to not escalate?
This is a $64 million question. We have to bear in mind that there are certain realistic factors. First, Pakistan leadership obviously has a domestic consideration or domestic constituency. But on the other hand, its economic vulnerability and its international vulnerability are also well known. So clearly, if the message from India is that we have done what we wanted to do right now, and if you behave, then we would consider our next step very carefully, then it can work. But at this stage, I think it's impossible and meaningless to speculate on what Pakistan will do. I think let Pakistan take its own decision. We have to be ready. And it's very important today that civil defense drills are going to take place. I think every Indian needs to fully collaborate and cooperate with whatever has been planned by the authorities. We should contribute our own might to the defense of India.
Absolutely, and so right. Mr. Bhatia, we'll leave it there, sir, but it's so good to get your comments early on. As a seasoned diplomat, important to get those. Thank you very much. Now, following the strike, several airlines have announced diversion and routes avoiding Pakistan airspace. Airports in parts of northern India, including Dharamsala, Leh, Jammu and Srinagar, and Amritsar, are closed until further notice. Several flights, including Air India, Spicejet and Indigo, have issued travel advisories. We're going to take a quick break now. What we'll do is we'll come back and we'll focus on some of the other big stories as well. So the India-UK FTA and textiles in focus. We'll be back with the management of Gokuldas Exports on the other side. Stay tuned. Welcome back. Good morning. We have, of course, the India-Pakistan situation, which, of course, is top of mind. And we've been updating you, and we will continue to update you in terms of what is happening out there. But last evening, you also had the India-UK FTA, which was signed. It's been a deal which has been negotiated for over 3 years and was finally done. And I think it's a big one, which I think perhaps sets the template for other bilateral trade deals with sort of other big trading partners as well. One of the sectors which I think has been in so much focus around this in a positive way is the textile sector, the labor-intensive textile sector. Siva Ganapathy is Vice Chairman and Managing Director at Gokuldas Exports. He's now joining us. Siva, good morning. Good to have you with us here. Thank you for your time. And thank you for joining us. I know you're unwell, so good to get you on. So tell us, Siva, and I think at this point in time, we can only talk in terms of some large numbers and maybe use experience from other countries which signed similar bilateral deals. Bangladesh, for example. What is the size of the industry now? Apparels, let's stick to that. What is the potential for it to grow to post this FTA?
So if you look at, Bangladesh's exports to UK, it's almost 4 billion. China's exports is 5 billion. And India is about 1.5 billion or something like that. So Bangladesh is large, thanks to FTA, thanks to duty-free access, because of it being a low-cost country. So that gives them a special access, tariff-free access to UK market. They have a 12% advantage over India, which now through this FTA is nullified. So we get a level playing field with Bangladesh. And currently, Bangladesh itself is facing some problems related to its own internal stability. On top of it, if India gets a level playing field with Bangladesh through this FTA, there is a good likelihood that a lot more orders will get spread out between Bangladesh and India. India, if you recall, has got a historically great affinity with UK. There is a large Indian diaspora. UK understands India well, and on top of it, if we get a duty-free access into that country, I presume that there must be a lot more opportunity to source from India. In anticipation, several brands have been socializing, sourcing from India market. Now this will get an incremental fill-up and will, rise very quickly. So I see this as almost $1 billion opportunity for India, incremental opportunity for India, between goods that are produced in Bangladesh as well as in China. If you see China's exports to UK, out of the 5 billion, almost 1 billion is cotton-based garments. 4 billion is MMF, which will be a bit difficult to move out of China. But that 1 billion is a huge opportunity where we will have a 12% advantage in cost over China. So it's a huge opportunity, I would say. UK is a large market too.
Right. Siva, so $1 billion incremental opportunity because of this FTA for India.
That's that's my reckoning.
And this 1 billion is overall textiles or apparels?
Apparel. I'm talking only apparel.
Simple. Okay, that is one. And just run us through the tariffs. You said we have a 12% advantage over China, and
That's
we are
correct.
now at par with Bangladesh.
That's correct. Going forward, as and when this FTA comes into effect.
Okay, and this is based on what the tariffs, what are Bangladeshi products tariffed at by UK and what are Chinese products tariffed by UK compared to what we are now going to be tariffed at, right?
Correct.
So at par with Bangladesh, 12% advantage to China. Got it.
Right.
All right.
Right.
Hi, Mr. Ganapathy, and thanks a lot for joining in, sir. For your company per se, Europe as a percentage of your total mix, I think it was in mid-single digits. Could you
That's
help
right.
us out with your exposure to UK? What is it? And since now we have this FTA that will give us a bit of a tailwind, for your company, where do you see the UK market go up in terms of a contribution of revenues?
So historically, we've been focused on US market, which is a very
Yes.
large market, and we get, we were at level playing field with other countries because, United States charges the same tariff across the globe, barring some African countries. We do have UK-based customers, and currently our revenues from UK would be of the order of about 250 crores per annum or thereabouts. So about say 5% of our revenue. I see that can go up significantly. We do have a good mix of UK-based customers. We have fairly large customers that we work with, and we do see potential to expand that relationship. In fact, some of those will pretty quickly expand as we go forward.
No, I think that is interesting. Is there any way you are one of the larger players, Siva, with a lot of capacity?
Right.
How does this help this 1 billion incremental? Any way to look at how much could your share be?
See, I think the larger players will definitely have an advantage. It all depends on how much capacity one can bring to bear to take advantage of this. And I'm also hopeful that with other FTAs in the pipeline, that is with EU and hopefully with US as well, we should see a good amount of tailwind for India. But in the meanwhile, if we stick to UK, I think those who can put up capacities will have the advantage. We have capacities coming up as we speak. We have 3 new factories in the works, and we will work towards offering those capacities to customers.
Any big numbers? Any way to talk about those?
No, these are bit early days because these FTAs will have to be ratified by the different by both these governments. It has to be announced. The custom portals have to be changed. I think by the time the FTA kicks in or comes into effect, it will be anywhere between 3 months to 6 months. I'm not sure of the timeline, but it should take some time. This is a good time for us to prepare ourselves, have more dialogue with the customers. And I think we should have a good, swing up from the second half of the year and really see that benefit coming, the next financial year.
All right. So from 5% of a total contribution going to the UK or as a percentage of your business, you have capacities coming on stream. For the time being, I think it's more than 80% to the United States. How much can the UK contribute as a percentage of your business mix, sir?
I think we can double, because it's off a small base, right? So we can grow. I mean, we can grow even more than that.
All right, I've got that. Siva, in terms of profitability, is there an advantage selling to the UK compared to other regions, or not really?
So, with FTA, always it benefits, right? So if there is a 12%, duty benefit, then obviously there is some benefit that one could, seek. So that should come in. It all gets competed away at some point. So, we will have to see how that plays out.
Okay, all right. So, I know we called you with regard to what's happening with regard to this UK FTA that's progress, but what about in the United States? If you could just brief us about how have things moved in the last month, 45 days or so. Because of these tariffs that have come in place, has there been a big slowdown? There's a lot of uncertainty, I'm sure, out there in the US markets.
Yes, there is an uncertainty. There are twin uncertainties. One is uncertainty with respect to the tariff, and the other is the uncertainty with respect to how is the US market, the consumer market, going to pan out over the next 6 months to 12 months. So there's a fear that there could be some degree of recession or a slowdown, and brands are tweaking down their inventory just in case they don't, carry the risk of excess inventory, particularly carrying excess inventory at a higher price, paying higher tariff.
So are they asking for discounts, sir? Are they asking the global retailers?
Of course they are. So they're trying to, seek support from the supply chain, and there is a dialogue going on across the supply chain for some discounts for this 90-day period. The problem is beyond that. So if, for example, if an order is placed today, by the time the order gets delivered, it will be post the 90-day tariff window. And we don't know what the tariff is going to be post the 90-day tariff window. So how do you place an order now without having any clarity on whether the tariff, the incremental tariff, right, the reciprocal tariff, is 10%, 26%, 30%? What is that number? And how do brands place those orders? So this is the challenge that most brands have, and they are holding back order placement till they get some clarity. So this is going to impact not only the margins because of some of the discounts that we're negotiating with them. These are early days still, and because of order placement being held in abeyance because of lack of clarity on tariff.
Sure. All right, Mr. Siva Ramakrishnan, thank you very much for joining in and giving us your perspective on what's a landmark deal for India. The UK-India FTA finally signed. Of course, great news for apparel exporters, textile and apparel. And it's not just actually apparel and textiles, leather, gems and jewelry. There's a whole range of other sectors where tariffs become zero for Indian exporters. So big news coming in. And we'll discuss the other part of this as well, which is that from the India perspective, the duties on Scotch, UK Scotch or, liquor, EU liquor, those duties will be lowered as well. So we need to watch out for how Indian giants like, say, Radico or etc., how they deal with the competition. Okay, let's take a very quick break. Come back on the markets full throttle in just a bit. Asian markets are holding up. We'll talk about some of the key stocks in focus and look at the implied open. If you can actually get the implied open up, it was pointing to a lower start earlier, but then there was a bit of a recovery as well. 88 points down. That's what we're getting. GIFT Nifty up 116. Take a break and come right back. Welcome back. So we are getting ready for a very, very significant morning, a significant open as well. And as the implied sort of Nifty just told you, the expectation is maybe a 90-point hit. Let's get in a big market voice now to get some perspective on the situation on ground. We have Prashant Khemka, founder of White Oak Capital Management, joining in. Prashant, thank you so much for being. I know you were at the Berkshire Hathaway event and you're staying up just to take this call, but it's a big moment for the market as well. What's your sense? I mean, typically in the past, when we've seen terror instances, the market kind of takes it in its stride. What should we be expecting? I'm talking about the here and now, not the longer term story, but the immediate next couple of weeks. What's the advice you'd give to investors?
No, I agree, Surbi, with your assessment that in the past, when such events have occurred, they've then, de-escalated. So, assuming the most probable outcome is that the situation would de-escalate, we should not have much or any material impact or lasting impact on the markets. The event, since it's very fresh, we may have a little bit of a, down open, but who knows, might, recover during the day as well. So I don't expect this to have much of an impact unless, of course, the low probability event, which is that if this continues to flare up, then it could create some choppiness in the market.
Prashant, what we have seen is this resumption of FII buying, right? And right in the run-up to Operation Sindoor, they've been putting in the money, always anticipating that something will happen. Do you see any change in that, any change in India geopolitical risk premium? And this is actually the timing in markets, it's all about timing, right? And this is happening at a time when there's a thaw on the US-China side. I mean, they're finally going to be sitting down and talking this week. And China's announced a stimulus. So will these two simultaneous events impact flows into India?
I think, again, investors, just as we were discussing, are aware that in the past when such events have happened, nothing of big significance has materialized. So I don't think, obviously they'll also be taking the cue from the market. If the market is down very substantially, then they'll get jittery as well. But if the markets hold up as in the past they have, the investors also would assume that this is something that's not going to be any different than what it has been in the past.
Absolutely. Prashant, hi. Morning, Prashant here. Just a quick, if you may want to listen into the next conversation because the other story, apart from India-Pakistan, of course, was the India-UK FTA, and I'm sure you've got thoughts on that as well. We already spoke with a textile company, Gokuldas Exports. They said incremental $1 billion opportunity for apparels out of India to the UK. And the next one, which has been long talked about, of course, is the alcohol space. And I think we've discussed this as well earlier. Now, the FTA has been signed after 3 years of negotiations. So let's actually welcome in the management of Radico Khaitan. Abhishek Khaitan is with us, Managing Director of the company, to run us through what the implications are. Abhishek, good to have you with us here. Thank you for joining us. First cut, impact of the FTA on the sector first, and then we'll come to Radico.
First of all, I would like to congratulate our Prime Minister, Shri Modi ji, and Piyush Goyal ji for signing the UK FTA that was long awaited. And now, if I talk from Radico's perspective, we welcome the FTA move because as a company, we are also one of the largest importers of bulk scotch. We would be the largest importer. And we'll be importing about close to 250 crores of bulk scotch in the current fiscal. And also we are exporting our malts to UK, etc., so which becomes much easier. So from Radico's perspective, I think it's a welcome move. The final prints are still awaited. So, but on the whole, signing of the FTA is a good move by the government.
All right, Abhishek, give us some more details then. The duties have been cut from around 150% to around 75% straight away. And then they moved to around 40% over a 10-year period. So what's the impact on the bulk scotch imports?
See, as I said, the final prints are weighted. So whatever the duty cut would be the cost advantage to Radico.
Okay, got that. Can you tell us a bit more about what you're exporting to UK? You said that, of course, a lot of the premium whiskies, it'll be easier to export, but some numbers will help. What's the quantum and the value that you're exporting to UK, and what kind of a boost are you expecting?
Yeah, we export our Rampur Indian Single Malt and Jaisalmer Indian Craft Gin to the UK.
Okay, yeah. So that is where you would expect them to get a leg up. I mean, those have done very well, of course, in the Indian market itself. What are the tariffs that you have to pay as of now? And I mean, to what extent do they come down? How soon? Can you give us some more detail?
So I think proportionately that will also go down. As I said, we've not seen the blueprint, so only after we see it, we'll come to know, but definitely it'll go down.
Okay, Abhishek, now the other thing, of course, is competition, right? UK brands which already are here, I mean, the price will go down. So you have same category brands even which perhaps will cost lesser. Could you tell us how that will impact Radico?
See, if you see already the major players are in India, and in India, what we've seen, the good quality brands sell. And especially when you go at the premium end, it is more of the brand image and the quality of the product plus the distribution. So I think we don't foresee so much of competition coming in because already the global players are here. And in fact, by lowering prices, you are denting your brand image. So I think water will find its own level.
All right, sir, if you could just give us an example of premium Radico whiskey and say a comparable UK premium brand. How will pricing now look?
Yeah, I'll give you a straight-away example. Like when we launched Royal Ranthambore, we priced it 100 rupees higher than any bottled in India Scotch. So we have always provided good quality brands at a premium price, even compared to the multinationals. So I think pricing, more than pricing, it is the quality of the product which will sell.
All right, Abhishek, I'm going to press you a little bit. Give us an example with pricing numbers and how will they stack up against each other?
See, first of all, it also depends like what is the kind of price discount, what the competition will do. It's too much of a hypothetical question because lowering your price definitely dents the brand image. So we do not know how the things will play out, but eventually, say as a company, for us in Radico, we are the largest importer of bulk spirits. So our cost will go down for sure. And like even if you see a single malt, Rampur, the Rampur double cask is priced at 8,500, which is higher than any of the malts. So pricing, premium, it all depends on the product aspiration. So I think I think the consumer is smart enough. And as far as the local Scotch company, if they come, they have to invest a lot in distribution, etc., which is not that easy. And all the global players are already present here.
Okay. So, Abhishek, to wrap it up, I mean, just tell us, there'll have to be some tweaks with respect to pricing strategy, right? Maybe not Rampur, that's your flagship, premium most product, but across the rest of the portfolio, what changes should consumers and your shareholders anticipate?
No, I think we do not need to change our pricing strategy at all because the prices already are established. And what will happen is only if a few companies come and try to flood the absolute, like the price point of the BII, little bit lower than that. But then those will be secondary brands. So I think there has been many secondary brands which have come from there, but to have the right kind of marketing, distribution, etc. I think it's too soon to comment on that.
Okay, all right, Abhishek, thank you very much. Sorry, Nigel. But it's interesting.
Yeah.
I think what Abhishek is saying that he does not see too much of an impact at all for the alcohol industry. I must point out, though, Shireen yesterday evening spoke to the Alcohol Industry Association head of Anant, but he was complaining in a very loud and significant way that this is really bad for the industry. So I think for Radico, there is this bulk Scotch they import to blend with their own stuff. And I think there is significant cost saving there. And of course, for United Spirits, I think Mangalam will talk about this more in top 10. I think they import stuff in any case. So they are beneficiaries.
They're also beneficiaries.
But for other unorganized players, etc., maybe smaller brands who don't have this bulk Scotch import, maybe at the margin, it perhaps is a little negative. We take a quick commercial break here. Let's get in Mangalam and others who are standing by on the top 10 stocks in just a bit. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. As promised, let's get to the top stocks that we're going to be tracking for you today. CNBC-TV18's top 10 stocks come up for you on the screen, and our researchers are joining in. Manglam joins in first up to tell us about Godrej Consumer. Manglam?
Well, for Godrej Consumer, it was a largely in-line set of numbers because the company had prepped the street with its fourth quarter update itself, though there were a few positives there as well. What's good? Volume growth at 6%. The street was working with a number of 4 to 5%. The EBITDA came in at 760 crores. The street was working with a number of 730 crores. So to that extent, even the margins were slightly better than expectations. The India business revenue growth came in at 7.5%. The Africa revenue as well grew about 16.5%, so that's a positive. What's not so good, the revenue by itself as at around 3578 crores is slightly below street expectations, and as is the net profit because of an exceptional loss of 31 crores, and the overall revenue was lower largely because of Indonesia revenue being 1.2% and Latin America sales being 12% lower on account of currency depreciation. The company said demand conditions impacted by headwinds in urban consumption, but there are a few bright spots. Palm oil prices are off highs, and they are doing good volumes in household insecticides as well as home care. So the strategic outlook for FY26 extremely crucial. See the stock mild green today.
All right, got that. Manglam, thanks very much. Let's talk about some oil and gas names, HPCL and Mahanagar Gas. Sudarshan, tell us more.
Morning, Surbhi. So it's green for both MGL and HPCL. For HPCL, like other oil marketing companies, HPCL too has reported earnings for Q4 that is much better than estimates. Both refining and marketing segment have reported earnings that were up sequentially as well as year-on-year, and EBITDA was supported by lower operating expenses and higher marketing inventory gains, and because of that you are seeing EBITDA that has come in at around 5,244 crore against expectation of 4,822 crore, and margin too has improved. It has come at 4.8% against our expectation of around 4.4%, and strong segment that refining for HPCL has helped company report gross refining margin of $8.40 per barrel against our expectation of $5.46. Now coming to MGL, recent price hike that company has taken, it has helped company to report improvement in the margin. Talking about the headline numbers, revenue was up 6%. It has come at rupees 1,865 crore against our expectation of 1,784 crore. EBITDA has improved by 21%. Margin has improved and has come in at 20.3% against our expectation of 18%. And because of the price hike, you are seeing an improvement in EBITDA per SCM, which was up 20% sequentially against expectation of 5% growth. And because of that, EBITDA per SCM has come in rupees 10 versus 8.30 that company had reported last quarter.
All right, Sudarshan, very helpful. Thank you very much for that. Let's now get to a couple of more names. Radico Khaitan, of course, we spoke with them just now with regards to the India-UK FTA, but numbers also came through, and then there is Kansai Nerolac. Magalam, take it away.
Well, we start with Radico Khaitan. Incredible numbers coming in. 21% growth in their revenue. The EBITDA has actually grown by 45%, taking the margins all the way up to 13.5% from 11.5% itself. And on the back of that, the net profit has surged 71% at around 92 crores. Overall volumes are up 28%. Prestige and above, that's premium products, volumes are up 17%. And the regular volumes were boosted by, the change in Andhra Pradesh. So as a result of which, there was a big jump. The debt also reduced year on year, so that's a positive. Add to that, we have the tailwind coming in from the UK-India free trade agreement. See Radico Khaitan in bright green today, but not so much for Kansai Nerolac. Why do I say that? Because, the revenues grew just about 1.5% on the back of volatile input prices and volatile forex. The EBITDA margin came down by about 90 basis points, and the net profit declined by about 10% as well. The company said that they are looking at tight liquidity and lower spending in the category, but there is gradual recovery in decorative. Automotive is doing well for them, but raw material as well as forex continue to remain volatile. See some red on Kansai Nerolac.
Okay. All right, Mangalam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us about Paytm and Piramal Enterprises. Abhishek?
Paytm, the numbers were below analyst estimates. Revenue came in at 1,911.5 crores versus a Motilal Oswal estimate of 2,100 crores. Now, they reported a net loss of about 545 crores versus Motilal Oswal estimate of about 110 crores. And this loss was higher due to one of the exceptional items in the P&L. The contribution profit that soared up by 11.7% on a sequential basis. The GMV that that has slowed down. The growth rate over there is just 1.2% on a sequential basis. Our total transaction is up 16.5% YOY and close to 7% sequentially. Piramal Enterprise, strong disbursements growth over there, 16.65% sequential growth in disbursements is seen over there. AUM growth remains steady at 17.2% YOY and more than 10.5% sequentially. However, the PNL was weak, so the NI growth was just 2.7% quarter on quarter, which suggested that the net interest margin might have been under pressure on a sequential basis. The PAT has come in at 102.4 crore. However, that is on account of the fact that they have used AIF provisions which got released into the PNL worth about 370 crores. Asset quality largely stable. Gross NPA ratio at 2.84% versus 2.85% in the previous quarter. Back to you.
Okay, all right, got it. Abhishek, thank you very much for that. Let's talk about KEI Industries, and it's a hat-trick of good earnings. RR Cable, yesterday we got one more, and today it's KEI. Yesterday was Polycab. Upasana, take it away.
Certainly, Surbhi. Well, good morning. Starting up with KEI. Well, company has reported good set of numbers. The revenue growth was much higher than the estimates. Now, this was because of the company's key segment, that is cables and wire, which reported a strong growth of 34%, and it outperforms its peers such as RR Cable, Havells, Polycab that have reported their numbers in Q4, and also much higher than the street estimates of 18% growth is what they were working with. Now, EBITDA and EBITDA margin was largely in line, but PAT was slightly higher than the estimates. Now, talking about FY25 revenue growth, it stood at 20%, which was slightly higher than the guidance given by the company, that was around 17 to 18% in FY25. Now, coming to Q4 numbers, the revenue growth stood at 33%, which was mainly driven by company's cables and wires segment, which the revenue growth was quite high at 34%, and margins also largely stood stable at 11%. Now, this growth in cables and wires was mainly driven by low tension, high tension cables and even house wires. Now, coming to overall EBITDA, it saw an uptick of 18%, margin saw a downtick of 60 basis points at 10.3%, and PAT saw an uptick of 35%. And lastly, coming to gross profit, it fell by 130 basis points to 23.7%. This is likely due to lag in the passing of commodity prices. So all in all, strong set of numbers from KEI Industries.
Absolutely. Thank you very much for that. The other one, of course, is BSC, which reported numbers. By the way, NSE also reported numbers yesterday. Vamakshi is here with details on BSC, the listed one. Vamakshi, over to you.
Well, absolutely, Prashant. Good morning. BSC reported a strong set of numbers, while the performance from NSE was rather weak. But let's focus on BSC then. BSC reported a revenue growth of almost 10% sequentially. Revenue came in at 847 crores. It's 10% higher than the consensus estimates. And this growth is largely being driven by the transaction charges, which were up nearly 20%, and other operating income, which was up nearly 12%. On the flip side, treasury income declined by nearly 9%, and services to corporates took a knock of almost 17%. The EBITDA margin saw a sequential improvement of around 58 basis points. The EBITDA margin now stands at 57.2%. It's, however, lower than what the street was penciling in. Now, this time around, there was a SGF reversal of almost 109 crores as compared to an SGF contribution that the company made in this previous quarter. And given that, there has been a net profit of almost 493 crores. This is an uptick of almost 125% sequentially, largely driven by the SGF reversal. The operational metrics, the average daily notional turnover saw a dip of almost 35% sequentially, but the daily premium turnover, on the other hand, saw an uptick of almost 35%. Overall, when we look at the numbers, it's a beat, going with the green for BSC.
Right, and the market share in index options as well, going up to around 20%. And now, with the recent changes, they're hoping to make some inroads into the cash market segment as well. We'll keep an eye out on that one. Valuations not very cheap, but going with green on that one. Let's hop across to Ria. She's here to tell us about Prestige Estates. Ria?
Well, Prestige Estates will definitely be in focus today. They've achieved rupees 3,000 crores of sales for their project in Indirapuram. Remember, this was the first launch of the company in the NCR region, and this is within a week of its launch. The first phase GDV for this project is over rupees 9,000 crores, and after the second phase will be launched, the total GDV for the project is expected to cross rupees 12,000 crores. Now, remember, after the company had announced the launch of this project, Morgan Stanley had upgraded the stock to an equal weight rating with a target price of rupees 1,370. CLSA had also maintained its outperform rating on the stock with a target price of rupees 2,380, saying that they believe that the company can sell around 60 to 70% of this project in NCR in FY26 itself. Today, after this announcement, the management has said that they have significant launches planned across the country in Bangalore, Chennai, NCR, Mumbai and Hyderabad as well. So positive triggers for the stock, and we're expecting it to open in the green today.
All right, Riya, thanks very much for that. Quickly recapping our list of stocks to watch. We're looking at Godrej Consumer, Radico Khaitan, HPCL, NGL, KEI Industries, BSE and Prestige Estates on the back of positive news flows on the green side. Kansai Nerolac, Paytm and Piramal Enterprises are stocks that could open in the red because of some negative news flow around them. Take a very quick break. We'll come back on the other side. We'll, of course, discuss some stock developments with Siddharth Khemka and also get you the latest on ground in terms of the security drill and other defense-related developments. Welcome back. Well, we'll start getting some of the market cues and reactions in about 5 minutes. We'll see what the pre-open is indicating. Because till now, what the anticipation is that we'll probably start about 80 points lower as the market digests the overnight developments. We have our colleague Parikshit now joining, and there we go. Okay, the implied open has actually reduced that cut. It was about 88 20 minutes ago, and now it's about a 60-point drop. That's the implied open. We have Parikshit joining in. Parikshit, what a night. But lots happening on ground today. There are the defense safety drills that are ongoing. I believe there's an army briefing as well. Just run us through what we can expect over the next couple of hours, perhaps.
Well, it seems that India was planning for this over the last few days. Just yesterday, a notice to airmen was issued about restrictions on airspace use in areas in Rajasthan and along the western border with Pakistan. So all these airports will see restricted operations because the Indian Air Force is carrying out high-intensity drills on the 7th and 8th of May. Having said that, we are also looking at mock drills all around the country. And this is happening because India is testing its civil defense preparedness for the first time since 1971. And we're looking at drills whereby air raid sirens will go off, civilian control rooms will be tested, civil defense teams will be assessed for their ability to communicate via hotlines with the Indian Air Force as well. We're looking at training for students and civilians in different parts of the country, what should happen in case there is a need for evacuation, where to take shelter. So all these training mechanisms will be done to make people aware of national security needs during this hour. Why is this all being done? The Indian Army and the Indian government statement on the retaliatory strike was very clear. We have carried out a non-escalatory strike on Pakistani terror groups only. There were 9 targeted strikes, and this was not to attack any economic installation, vital installation, army or civilian installation in Pakistan, but only terror gangs which have been perpetrating violence against India and were involved in the Pahalgam attack. So our response has been very measured, and that's the likely tone that the Indian forces and the Ministry of External Affairs will take in that press conference at 10 a.m. this morning. But at the same time, when you carry out a strike of this magnitude, which is bigger than Balakot, what it means is that there could be an escalation and Pakistan may try and take things a few notches higher. So one cannot rule out the possibility of a wider escalation. And that's why these civil defense mock drills are taking place all across the country at different timings. So this will take place at schools. This will take place in civilian areas, near certain religious places as well. So it's pretty comprehensive. And this is not the last of it. We're possibly going to see more such mock drills over the next few weeks. And India is going to continue taking measures to economically and diplomatically isolate Pakistan as well.
All right, Parikshit, thank you so much for that. And might I add, the color that you and I are both in today, I don't know if it's a coincidence or not, but it's the color of Sindoor. So in solidarity, we stand. Thank you so much for the update. Nigel?
Well, that's right. Let's move on then. Let's talk about a couple of stocks. As promised, I think we have Sid Kemka who joins us on the show. Hi, Sid. Good morning and good to see you, Ben. Well, let's focus on a couple of stocks. The India-UK FTA, well, that's a move forward. And that'll be good news for a couple of alcohol players, namely United Spirits, because it'll help on volumes. Margins, it may not help, but volumes could move up from here on. So we'll have to see how that goes about. So your view on that. And also we had Gokul Das who joined us earlier today. They said there's $1 billion opportunity for Indian makers, to pull some share from China as well as Bangladesh. How do you approach both these two sectors?
Definitely. Good morning, Nigel. So good to see you. I think that's a big positive news. After many years of negotiation, finally India has managed to get the free trade agreement done with UK. And looking to increase the trade over the next few years. So I think one of the biggest sector which will benefit definitely is the alcohol beverage segment. The reduction of import duty from about 150% to 75%, we believe should lead to about a 7.5% benefit at a consumer level. What we see is that customs duty is roughly around 15% of the current MRPs. And we believe that mostly these companies should be passing on these benefit to the consumers, making these premium brands and the Scotch whiskies making more affordable and to gain market share. So definitely, I think in that space, United Spirits is the largest player. There we could see a sharp growth or a good growth and market share gain in the premium segment where your margins are much better. So overall volume and value growth through enhanced accessibility of premium products, improved cost economics, both for the import of some of these raw materials plus the finished goods. So overall, I think that is pretty positive. Overall, for United Spirits also, we believe that the consumer trends in upgrading and the increased frequency that is driving good growth, and United Spirits is well positioned to capitalize on this large opportunity of the alcohol beverage industry in India and as an overall. So we expect margins to remain healthy and sustain in the range of 17.5%, and see that United Spirits could be a big beneficiary of this UK free trade agreement.
Siddharth, hi, morning. Wires and cables electrified this season, right? All the stocks have done well. Everybody's come out with good numbers. And KEI, I think the growth rates are higher than even the others. Polycab and RR Cable. Do you like any of the stocks?
Yeah, morning, Surbi. I think yes, you can say a hat-trick in the sense after RR Cable, strong numbers and pretty strong commentary. Polycab followed through, and then KEI. So we like the space. We believe that post the correction after the news flows of both Birla Group entering into the phase, Adani Group did a joint venture, but the details are not yet out of what the plans are, how much and when the plants would be. So to that extent, I think the completion is still 12-18 months away. Until that time, we see strong growth recovery in this space. RR Cable is something which has given out strong outlook in terms of 18-20% growth in the cables and wire segment, 25% growth in the FMEG segment. I think that is something that could be the outperformer going from here. Valuations are pretty comfortable, or you can say among the three, RR Cable is the cheapest in terms of valuation at about 30 times compared to about 35 to 38 times for Polycab and KEI. Polycab is something that we continue to like, is a market leader, has the most diversified product profile. And now with KEI also giving out with strong numbers, I think the space should do well. But what we like, A, Polycab because of its market leadership, and B, I think RR Cable because of its comfortable valuation.
All right. Sid, stay with us. We'll keep coming back to you. By the way, you saw the GIFT Nifty, the pre-open session changes coming up. But those are very initial rates, and it usually takes at least 5 minutes for things to start to settle down a little bit. And I think they already are. I saw 350 points lower. It's down about 200 now. Now, let's get back to the big story, right? This is Operation Sindoor. Several airlines have announced diversion and routes avoiding Pakistani airspace. My colleague Shireen is joining us from Delhi. Shireen, good morning.
Morning, Prashant. Well, of course, a lot of this is in developing stages at this point in time. But what we do know, and it is important to put perspective on this because several developments have actually taken place. There is Operation Sindoor, which is the operation that happened overnight. But even prior to that, there was a note to aviation companies, to airlines, to airport infrastructure in relation to the drills that are going to be underway over today and tomorrow. And of course, there are also Air Force exercises and the Air Force had also put out a statement. So all of that must also be seen in conjunction with the developments that have happened overnight. So what it essentially means is that there will, as a first order impact, there will be disruptions as far as airline travel is concerned. So you've already started to see airlines put out on their websites, on their social media handles about disruptions, about delays and so on and so forth. So be prepared for that. Now, in terms of airport infrastructure, airports like Srinagar, Amritsar, Dharamshala, Leh, these at this point in time are shut for any civilian purposes, and that is the information that we're getting. Of course, we are expecting the Aviation Ministry to put out an update shortly. Perhaps there will be an interaction as well that will give us clarity on what this also means. Because remember, Pakistan had already shut its airspace. So what you had started to see was that Indian airlines like Air India, Indigo, etc. were no longer flying over Pakistan airspace. But what we had also started to see over the last 48 hours was that even European carriers like Lufthansa, Swiss, even the Middle East carriers were then avoiding Pakistan airspace, which had meant longer air travel. But with this escalation that's happened overnight, what this is going to mean, in terms of flight and travel plans is going to be a question. We've started to see advisories come in. UK has issued an advisory cautioning people about travel. So we will perhaps start to see that play itself out as well. But outside of travel, crucial meetings to watch out for. There is going to be a cabinet meeting in a short while from now. There is going to be a cabinet committee of security meeting as well. So we will perhaps get more appropriate response in terms of what we should expect as the next steps. Meanwhile, the Pakistan side is also issuing statements. Of course, we must clarify unequivocally. This is information that the government of India has put out, as well as the Ministry of Defence has very clearly refuted, calling the Pakistan claims of shooting down Indian Air Force planes as false, as fabricated, as fake. So that is very important. In fact, we've seen Pakistan government officials and ministers going on the air and repeating that claim. So it's important to note that that is being rubbished by the Indian defense establishment as well as by the Indian government. There is, as you can see on your screens, a fact check that's been put out. So it's important to clarify that. But today is also the day that we will see those civil preparedness drills across the country. And of course, our colleagues are going to be targeting that. And that is going to be an important aspect of the Indian response. Important to also highlight, and this is something that the former Army Chief General Malik told us here on CNBC-TV18, that while, whatever happens at the borders happens, what we must also be mindful of are cyber attacks, and specifically cyber attacks on critical installations in India, on business houses and so on and so forth. And so we are in touch with the government to try and understand what is happening on that front, because that is going to be an equally important aspect as part of the current operation that's underway. So far, we're still awaiting a response on whether we've seen an escalation as far as cyber attacks and cyber threat is concerned from Pakistan. Reactions already coming in from the US. You've seen President Trump react to this in the Oval Office. You've also seen Secretary Rubio saying that he's been in dialogue with both sides, India and Pakistan, and they're hoping that this matter ends quickly, in the words of President Trump. We've seen other governments react as well. Israel coming out very strongly in support of India. The Chinese have issued a statement just a few moments ago asking for restraint. Also important to note that there is going to be a very crucial meeting of the IMF. The IMF meets on the 9th to take stock of the bailout package for Pakistan. So that's going to be another very crucial meeting to watch out for. But a lot of moving pieces at this point in time, but there are crucial meetings lined up, and of course there are these drills that are going to be underway across the country, and we'll keep you posted on all of that.
Absolutely. Absolutely. Very, very helpful context, Shireen. And we'll keep coming back to you as developments play out and sort of news keeps coming in. So important to track. I think we've come to the end of the pre-open session. Maybe we could just take a quick look at what's happening on the Nifty before we get in Mitesh and Sudarshan with what they'd want you to do in terms of trading action. 150 lower is 0.6% down on the Nifty is what we have. By the way, while our markets will start to trade, this news flow is at least a few hours old, more than a few hours old. Global markets and Asian markets, etc., have all been trading. And if you look at Asia and what's happening there, I mean, markets have not even blipped at all, any of the regional markets, nearby markets. And if that is any indication of, at least expectations, I mean, I think the expectations very clearly, even before the strikes, has been that it'll be a measured, calibrated response, and that's it. And I think that continues to be the case. And the strikes themselves, the language which our forces in the Defense Ministry used to describe the strikes was exactly that, which is not targeting civilians and, of course, military targets and terrorist infrastructure, etc. So that is something important to point out. Sudarshan and Mitesh are with us with what they'd want you to do in terms of trades. Gentlemen, good morning. Good to have both of you here. Mitesh, you go first. What would you like viewers to do?
I think, the failure of the Nifty to get past 24,500 means that we are back into some kind of range, and 24,250 is the midway pivot. But I think we might even end up testing the lower end of the range, which is around 24,000. In the worst case, 23,850. So I think we'll try to look at reversal patterns on the hourly, half-hourly charts over there, and that will be the zone if we get closer to 24,000 when we'll start fishing for long opportunities.
Okay, fair enough. Sudarshan, what about you? What would your framework be?
Well, see, markets hate uncertainty. That uncertainty is now behind us. Today is a buying day. What it means is that we have been talking about buying on a dip, where we are getting a dip, and the only point is a question of tactics. Wait for a little while, let the market stabilize and go long. Just be on the long side of the market and buy.
All right, got that. Gentlemen, let's also boil it down to some stock strategies. Sudarshan, morning. What would you go with?
Yeah, good morning. Well, I would go and buy Bajaj Finserv, stop under 1988. Balkrishna Industries is a buy with a stop under 2668. Biocon is also a buying opportunity with a stop under 334. My only intraday short is CAMS, which has a stop above 3678. But broadly, I'm using this dip to go long.
Okay, got that. Using the dip to go long and a couple of stocks that were mentioned by Sudarshan. Mitesh, coming across to you, what are the stock specifics you're looking at?
I have a mix of buy and sell calls. For me, Biocon is also a buy. Sudarshan also mentioned that. Look for targets of 355 and a stop below 335. HUL is a buy with a stop at 2360 or just below it for a target of around 2430. And on the selling side is Coal India with a stop at 384 for targets of 365, and ABB sell with a stop just above 5400 for targets of 5200.
Okay. All right, gentlemen, thanks very much. We'll come back to you, for some more advice a little later. Pre-open has settled. We have about 3 minutes to go for the actual rates to kick in. 146 lower is what the Nifty is right now indicating, which is a little more than the implied open. Let's see how this plays out. The Bank Nifty is down about 0.5% at this point, and the mid-cap index, like yesterday, is seeing a slightly broader decline. So perhaps a little more cautiousness in the broader market. I'm just looking out for some of the stocks in this, India-UK FTA deal, the companies that stand to benefit. So look at Gokuldas, 6%, United Spirits, 2.5%, and even Radico, for that matter. Some of these stocks are showing a little bit of green, though otherwise it's a quiet start. BSC, the other one, even Sula for that matter. So some of these Alcobev stocks and textile stocks are positive.
Gokuldas, we pulled Gokuldas. We should just look at it. Did we pull it up?
6%.
6%
up in the pre-open.
Okay. $50. And United Spirits and Radico, the other names which should be mentioned, maybe just quickly put those up as well.
And if you can get KEI as well, maybe.
Yeah.
KEI Industries, good set of results for the fourth quarter. And the expectation is it will have a positive start, flat actually on KEI at this point.
Yeah. Let's just look at the two other names which reported during closing the last hour yesterday. Bank of Baroda, I mean, shares were down 10%, smashed. And there was asset quality pressure. NIMs were under pressure, nothing on it for now. And CG Power was a disappointment. I mean, CG was a bit of a surprise. And we'll have these come up as well. CG is down about 3.5% or so. this morning after yesterday's near 6% odd slide. I think we have Pankaj Tibrewal, Founder and Chief Investment Officer at Ikigai Asset Managers, now joining us. So let me welcome him in. Pankaj, good to have you with us here. Quick thoughts before market open. So got about 90 seconds. What are your first thoughts, reactions to the strike, and what does it mean for markets from here on?
So Prashant, we all expect it to be a measured and a calibrated strike. And over the last decade, we had two instances in a smaller manner like this. One was the Uri, and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%. So actually, towards the end of Kargil war, actually markets did well. So we have to see how it escalates. Initial knee-jerk reaction could be negative, but I think it will be a great opportunity to increase your equity exposure. And we'll discuss what are the 5-6 reasons which are making us positive from a medium to slightly longer term outlook on Indian equities.
All right, Pankaj, we're going to hear in from you on those important sectors that you're looking at. For the time being, I think we need to go to market opening, which is indicating we start off with a cut of around 150 points, and there are just 190 stocks that are advancing as of now.
It can change pretty quickly given how developments and indications start to come in on the sort of India-Pakistan story. Well, what do we have? 100-point lower is actually already starting to come off from where we started. It's about 0.4% down. 24,277 is where we're at. You've got the bank Nifty, which is down about 0.2%, 54,180. The mid-cap index is starting about a 0.25% lower, and I think the small-cap index will come up on your screen. I'll give you a quick sense of how we're starting. 0.5% down, 16,120 on the small-cap index. 10:1 in favor of declines is what you have on the overall NSE board. And of course, as expected, about 38, 39 stocks are lower and 10, 11 stocks are higher. So sharp recovery at play. So from being down a half, we are down about 0.15%. So barely anything at all. And this is what I'm saying. It'll move very fast if the market starts to get a whiff that what has happened, that's it, and nothing more. So 24,350 on the index.
It takes me back to that dreadful day, 26/11, the Mumbai terror attacks. I remember even on that day, even with the uncertainty, the market has a mind of its own, and it decided to close higher. Anyway, now it is financials that are leading this recovery. So let's look at the upside first. Hindalco, Shriram Finance, Jio Finance, SBI Life, so Axis Bank, cutting across the board. Most of these names are on the upside for the time being. Tata Motors up about 2% as well. There's BEL, which is seeing some buying. Hindalco on the upside as well. So these are some of the gainers on the upside. Coal India, Apollo Hospitals, these are the names on the upside. Largely, it's all about the banks. Let's see the downside, because the Nifty is still lower, about 20 points. So Asian Paints, HUL, Lever, FMCG names are on the lower side. IT is a bit lower as well. HCL Tech, TCS as well. Slightly lower. Maruti, Ultratech Cement, Adani Ports, Infosys. These are some of the other stocks. So the early trends are that financials are trying to fight on the upside, and it's tech and FMCG, which is slightly lower. But look at the mid-caps, Nigel. I mean, that index started lower, already bounced back, and now it's notching a gain of 0.5%.
Well, in terms of top gainers today, look at the BSE. Valuation-wise, that stock is not cheap. Their market share in index options has gone to 20%. The street loves that. Valuation is not cheap, mind you, but the street likes those numbers that they have given. And that's why that stock, after having such a big run, it's up close to around 6% as we speak. So a big positive reaction out there. Aarti Drugs, that's the other one that delivered a fairly good set of numbers. So that stock as well is bursting away. And take a look at Paytm from the lows of the day. What a beautiful bump up we have seen on that stock. It's recovered close to around 5% from the day's low. It started off with a cut of close to around 1% or thereabouts. Tata Motors, that could be one of the potential gainers from this India-UK FTA. And that's why, in fact, that stock is bounced back. It's up close to around 3%. Then the sector that's really in focus is because of that commentary we got in from Gokul Das. They said that currently India exports to the UK is close to around $1 billion. And there's probably another $1 billion of opportunity out there. So Gokul Das is higher, but take a look at a couple of these other names. SP Apparels, that's up close to around 7-8% or thereabouts. You have Indocount as well that's joining in the gains. And KPR Mills, the other one in there, that's bursting away as we speak. So plenty of winners out there. And just as we do this market check in the first 2 minutes of trade, the Indian markets, it appears for the time being, we're looking ahead. The uncertainty is behind. The Nifty is on the verge of moving into the green. The Nifty Bank has recovered 500 points from the low point of the day. And from 190 stocks that were advancing, currently you have 690 stocks that are advancing. Things are still very, very fluid. But for the time being, I think the street was waiting by, for this geopolitical risk to settle down. And it appears, at least as of now, we're looking ahead.
No, absolutely. And I think market in the green now. So 24,384 is where the Nifty finds itself at. This is not, I mean, markets are collective wisdom. And the expectation is that, what's happened, there is no escalation is really priced in that sense. And that the fact is that this is it and let's sort of move ahead. And actually it has been, as we've been pointing out, the local crowd, the HNI crowd, who in a way earned their stripes. I mean, the last big call that bunch made is collectively was, that $1 billion they bought during the 4th of June, the election day low. And that turned out to be correct. And they've been sitting on the sidelines expecting something. Now that something has happened, we've struck terrorist strikes across the border. And now we move on. I think that's broadly the expectation as things stand right now. Nothing very much on the wicks as well. So it's kind of flattish to even slightly in the green on the Nifty. Surabhi.
Yeah, no, absolutely. And I think that, like you're saying, Prashant, collective wisdom, because these are precise strikes. They're at terror facilities. It cannot be denied. It's backed by evidence. So easier to perhaps convince the international community as well, if need be, on the need, the mode and the targets themselves. And perhaps that's why there's hope that this will not escalate. Just one or two more stocks. Prashant was talking about CG Power, which reacted quite negatively yesterday after numbers. That's recovering. Financials are in general doing very well. Look at Chola Investments, look at Muthoot Finance, look at Aditya Birla Capital. There's a wide move beyond the blue chip banks today on the financial side. KI Industries started lower, but it's recovered, it's moved higher. And then I go back to financials, Piramal Enterprises, Poonawalla Finance. So it's a big move across NBFCs today.
Well, that's right. Also pull up Welspun Corp. They won another order, earlier. I think an hour or so ago, it came up on the exchanges. So that stock is well in focus because now the order book has ballooned up to around 20,000 crores or thereabouts. So that's why that one, from starting off in the red, initially, in fact, now that one has moved into the green. Let's get in Nilesh Shah, though, founder and CIO at Envision Capital, who joins us on the show. Hi, Nilesh. Good morning, and thanks a lot for joining in. Well, for the time being, just looking at the screen, it appears the street wants to look ahead. The geopolitical risk for the time being appears, that's settled down. And now the uncertainty is behind us. Would that be the way you're looking at the markets from here on? We get back to looking at fundamentals. Trump's tariffs have been digested, and now, in fact, maybe part of the geopolitical risk as well is behind us.
Absolutely. Clearly, the geopolitical risk is behind us. The uncertainty has probably come to an end, though there still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us. And markets are going to be back focusing on fundamentals, earnings. India macros have never been as good as they are today versus what they have been over the last maybe couple of years or so. So I think on the whole, uncertainty is behind us. Macros are getting better, and fundamental earnings kind of continuing to be very, very stable. So I think on the whole, continue to be very, very positive.
Nilesh, hi, good morning. Let's just talk about the India-UK FTA and any portfolio companies for you which get a leg up, bump up?
Absolutely. The Alcobev space clearly benefits from this FTA with the United Kingdom. At one level, United Spirits, which we own, clearly is going to be able to import at a lower price. And therefore, that should basically drive a bit of its margins. But more importantly, local players who have in the high-end segment where premiumization has been a kind of a theme or a growth driver for them, companies like Radico Khaitan, which we own, they will basically also benefit as they will get to import basically the Scotch at a much lower price. So that will also improve their margins. And I think they just announced their results yesterday, where they basically announced a very strong double-digit revenue growth and margin expansion. So I think alcoholic beverages is a space which anyway I think has been on a very, very strong footing with domestic demand and premiumization. I think it stands to very clearly benefit with this free trade agreement with the UK.
Okay. By the way, just looking at some of the updates our colleagues have been sending in. So while the strikes are done, we need to see what's happening along the line of control. And there, the reports on civilian casualties, heavy shelling, all of them are still coming in. Nilesh, hi, morning. Good to be getting perspective from you today. So from the market standpoint, how should we be reading? Because the mix is getting only thicker and thicker. There's local geopolitics. We need to see what the Fed does tonight. Chances are they'll do nothing. They'll remain, steady on rates. And there is this potential trade thaw between China and India. So would you expect the market to significantly move higher from here in the coming weeks and months? Or do you expect more consolidation after the April rebound?
Well, there could be some consolidation, given that we've had strong up moves in March and April, especially from the lows of February and early March. So clearly there could be some consolidation, as undoubtedly there is a lot of noise in terms of what's happening globally. So that's something which could ensure that the markets will have probably some up moves and maybe some kind of down moves as well. But on the whole, after this up move, expect it to be basically now range bound. Maybe a couple of months from here could be time zone of consolidation. And as corporate India stands to kind of benefit from lower crude oil prices, lower interest rates, I think all of that will begin to kind of get reflected in their margins. In addition to that, the rural economy has been buoyant. Urban is expected to bounce back with lower interest rates. A couple of important developments which happened in April around manufacturing, where the demand for jobs under Manrega actually declined after 6 months, and manufacturing activities at a 10-month high. These all augur well and point to essentially the times ahead. So yes, there would be consolidation, which I believe would be healthy from a medium to long-term direction of the markets.
Okay, absolutely. We, of course, have Pankaj as well, who's been waiting by while we were reading all the rates. So thanks to both of you. Very important morning, and we need the right perspective. So Pankaj, going back to this, and okay, let me get down to defense. I'm not saying it's linked to today's developments, but in general, when we talk about the rebound through April, defense has been the best performing sector. I was looking at the Nifty Defense Index. It's up about 11%. Now, I don't know how much was sentiment in this anticipation, how much is reality. Orders are coming in. Operational performance has been looking good. Pankaj, would you play that space? If yes, how?
Surabhi, yes, I think defense has been a strong performing space, not only because of the Indian geopolitical situation, but what is going around the world. And it's very surprising that till a few years back, India was the net importer. And nobody ever visualized that India will also start exporting defense equipments. And if you look at some of the companies in the private sector, they received the order from the government later on, but their export order book was quite healthy, which means that India can, over a period of time, become an export hub in many of the defense equipments and ammunitions. So yes, clearly you have to be very stock specific, but be very mindful of the fact that in many defense companies, the regulator, the customer is only one, which is government. And there the business risk is always high. So you need to buy at a reasonable valuation. Make sure that you don't overpay for some of those while getting flowed in the narratives.
Pankaj, another space you've liked is auto ancillaries, right? And you've liked it for local reasons and auto ancillaries for non-auto reasons. But there's also this leg up to those players, understandably, because of the India-UK FTA. Of course, one will have to be selective in terms of who sells there, etc. Any thoughts there, Pankaj?
So, Prashant, our thought is that there are many auto anchors in India which are pivoting themselves from pure auto anchors to non-auto also. And recently, we happened to visit a few of those companies in the month of Feb and March. And what we were surprised on the shop floor to see many global customers around it. And when you speak to those global customers, and these are large multinational companies, they say that you had a vendor base out there in Europe, some in China, and their longevity is in question. And we want to have a couple of suppliers, whether it be aerospace, defense, or semiconductors from India who are good in precision engineering. And many of these companies are very good in metallurgy, very good in cost competitiveness and quality benchmarking. So we believe that over the next 3 to 5 years, many companies will pivot from pure being auto ancillaries to non, because their precision engineering is quite good. And we are quite positive on few of them. Their non-auto component may be 5-10%, but over the next 3 to 5 years, we believe that that component could move to 30 to 40%. And hence the cyclicality of the auto would be a little bit arrested. So I think that's the way we are looking at few of the auto anchors in India, which will have the opportunity to participate in the industrial part of growth.
No, absolutely. Pankaj, well explained. Let me actually welcome in someone who you know very well, your ex-colleague, ex-boss. Nilesh Shah is with us, Managing Director at Kotak Mahindra AMC. Nilesh bhai, good morning. Good to have you with us here. We are speaking with Pankaj Tibrewal, and we have Nilesh Shah of Envision with us as well. What is your sense, Nilesh bhai, on the strikes and whether just looking at the market, the collective wisdom seems to suggest that expectation is this is it. It's been done responsibly. The statement from our side is that it's calibrated, aimed at military and terrorist infrastructure. Would you go with it, that no escalation and this is it?
So as a patriotic Indian, undoubtedly, Pakistan deserved a harsh response. And at least this is a beginning. From a market point of view, clearly the global support is with India. I believe in one of the news briefing, US has warned Pakistan, don't even think of retaliation. So hopefully Pakistan will realize that they should not escalate with a bigger country like India, which is far, far superior to them. The market obviously is right now looking at UK FTA. It's a deal which is truly amazing. It will open up many of our companies to cater to UK market. Normally the reaction post a conflict will be negative for the market, but I think the positive opening is obviously driven, one, by the fact that we believe this conflict will be limited. There will be no escalation from Pakistan's side. And second, the UK FTA deal is truly remarkable for Indian economy.
So, Nilesh, good morning and great to have you on. The market seems to be marching ahead. What's the sense? I mean, then we get back to asking more basic questions. Let's just for a second, expect or hope or assume or pray that this is contained. We've done what we had to do, and then now there is no major escalation. Then we go back to asking the more regular questions about valuations and earnings, Nilesh. We're also coming to the fag end of the earnings season. From that lens, how does the market look now?
The earnings season surprisingly has been quite okay. So far, about 100 odd plus companies have come out with results. And it is little above expectation from a collective point of view. Now, normally good results come first, bad results come later, so things can change. But so far, the earnings season is ahead of expectation. We should be ending Nifty 50 anywhere between 1,050 to 1,060 for FY25. The second thing, many a times on CNBC studio, I have mentioned, "Subah ka bhula, sham ko ghar laut aayega." This was in the context of foreign portfolio investors who were selling India between October 24 to March 25. They have started.
Nilesh, sorry, Nilesh, you always put it so beautifully. Subah ka bhula, sham ko ghar to aaya. But abhi wo wapas jayega kya? Given the geopolitical issues and the fact that there is a China-US trade deal perhaps in the works finally. Would that be a risk?
सुबह का भूला दोपहर कोई घर लौट आया तो अगर वो निकल के गया तो भी शाम तक तो जरूर
शाम को आ ही जाएगा. Got that point.
We could never anticipate FPI buying during this kind of conflict season. And it's not that this was unknown. This was known. So clearly it is the flow-driven market right now. FPI buying has pushed our market up. Domestic flows have been strong in the month of April as well as first few days of May. Put together, I will say we are a fair value market. Earnings season is little ahead of expectation. And flows have been strong. And it is the flows which are driving the market.
Nilesh bhai, all the question is I'll go quickly, like a rapid fire. One sector which you're most bullish about, Nilesh bhai, your team is most bullish about.
You take an easy route, whatever Pankaj says.
Nice one.
Pankaj is smiling ear to ear. No, I'm not going to. I know what Pankaj is bullish on, auto anks, and I think we spoke about a bunch of other areas, but banks, Nilesh bhai?
So on the banking side, clearly we are seeing that there is a differentiator coming.
Yeah.
Some banks have been able to deliver better results. Some have not been able to deliver better results. So focus on banks whose credit quality is good and whose liability franchise is strong.
Okay, got that. Nilesh bhai, thank you very much for joining us. Good speaking with you and good getting that perspective. Nilesh, the other Nilesh, this is to you. Same one.
The same question, Prashant?
Yes.
I'd probably say take three sectors. One is essentially home finances. I think they will benefit and you're going to see some step up in demand. Second is alcoholic beverages, and third is payments. I think these three, according to me, would be standout sectors or opportunities.
And I think we've discussed some picks from each of these spaces earlier on as well. Pankaj, we already got yours. So thank you very much, Pankaj and Nilesh, for joining us. Shorter conversations today, but we've got a big earnings track lined up as well. So let's get to it. I think KEI Industries, Nigel, with us?
Well, that's right. Let's focus on KEI Industries. The stock is reacting to a good set of numbers. Let's discuss the way ahead. We're joined by Mr. Anil Gupta, Chairman and Managing Director at KEI Industries. Hi, Mr. Gupta. Good morning. Thanks a lot for joining in and congratulations on a solid showing in the past quarter. A couple of questions, though, with regard to the past quarter first. Your exports have gone up quite a bit, I think so. It's gone up by close to around 3.3 times, and it constituted close to around 16%, I think, of the mix. Could you tell us, did you find a new geography? Is this something that you can sustain with regard to the export market? And also, how is domestic demand? What does it mean in terms of a growth guidance for this year? That's FY26. Please go ahead, sir.
Thank you, Nigel. If you recall, I've been consistently saying in my 3 quarters last commentary that we are focusing on export, and export will see a substantial jump in the coming quarters. And we are witnessing this quarter, last Q4, we have grown by 92% in exports. And I think this momentum will continue, and we should be seeing around 16-17% of exports from in our total sales in the coming year. It could go further, but we are still not having adequate capacity to increase it substantially, which should come by another 3 to 4 months. We should be getting our new capacities online in our new capex coming up at Sanand. And so far as domestic market is concerned, the momentum is good, especially in terms of renewable energy space and also data centers and infrastructure, as well as real estate. So I think that we expect to grow by 17 to 18% in this financial year also. Last year, we have grown by around 20% compared to our guidance of 18%. And we have slightly grown better, and export momentum will continue.
Okay, all right, got that. So, last time as well, you promised 17 to 18%, but you did 20%. Do you think the odds are that this time around as well, you outbeat the guidance that you have given? And also, you could help us out, what is the margin outlook? Because input costs have come down. You're going to be ramping up production as well as capacity, so operating leverage will play out as well. What's the margin number we should work with?
input in the past also, you must have seen that when the input rises, it has not impacted our margin. We are very working very calibratedly in calibrated manner in ensuring that our input and order book are a little bit of matching. So we have never lost on in our EBITDA maybe 0.5% here and there, even when the volatility was very high and the copper and aluminium went up very high. Even then we did not lose. And I don't want to benefit from commodity fluctuations because then it is a risky game. And margins should continue to be in the range of around 11%, what we have achieved, at least for this fiscal. I don't want to be too bullish on predicting higher margins. Maybe we will try to get definitely better margins.
Okay, so 11% is something we can at least work with for now. Got that, Mr. Gupta. Thank you so much for joining in. So just take us through what the big drivers are going to be. I mean, fourth quarter was good, I think, pretty much across the board. High tension, low tension, all kinds of, segments, even the wire segment. But basically, when you are talking about 18% growth in FY26, what will be the drivers of that growth? And along with the volume expansion, I mean, are you thinking of price hikes at all?
The growth drivers will be, I mentioned that the energy space, especially the renewables, the growth in the development of solar and wind energy projects, and consequent battery storage systems, pump storage projects, and consumption of energy projects like data centers, infrastructure, industrial, new manufacturing, industrial plants, and as well as the real estate. So this whole space will, should continue to grow, and I think we should see a good year ahead in the coming year as well.
From your various product segments perspective, within that, I mean, what should we expect on the product mix side and the KEI's own business segments? Which ones will perhaps be driving this growth?
In my opinion, all our business, segments, all verticals will be driving this growth. Means whether LT, HT cables, extra high voltage, or domestic market and export. I think all verticals should be growing in the similar fashion. And yeah.
Okay, and are you thinking of price hikes at all? I don't know if Q4 if you undertook any, but going into this year, moving forward, any price hikes?
Price hikes are always in line with the movement of commodity prices. Price hikes as well as price reduction both goes in the similar manner with respect to the commodity variation.
All right, Mr. Gupta, but EHV, that revenue seems to be under some pressure. But you're confident that it will bounce back?
At the moment, our order book in EHV is around more than 600 crore, and it is already bouncing back. There was some let up in the EHV segment, but we completely utilized our capacities by increasing our production of high tension cables on the similar machines and grow by 46% in HT cables in the same plant.
All right. Thank you very much, sir. Thank you for joining us, and good to get that clarity from you. The other set of numbers which came through, of course, was Polycab, right? I mean, same space. Let's get the management on. Numbers were in line with street expectations. Stock actually did well yesterday. Mr. Inder Jaisinghani, Chairman and Managing Director, and Gandharv Tongia, Executive Director and Chief Financial Officer at the company, are with us now to take some questions. Gentlemen, thank you very much for joining us. Good to get both of you on. Could you give us a sense of what has been the volume growth? Mr. Jaisinghani, this question is for you. What is the volume growth that we've seen for FY25? And what is the volume growth that you are expecting for the company in fiscal 26?
And before I specifically deal with your question, let me also give you a broad flavor of the earnings. This was the best quarter as well as the annual performance in the history of the company. We were able to breach 22,000 crore rupees of top line, as well as 7,000 crore rupees of quarterly top line. The profitability was all-time high.
Gandhar, if I can just come in, we have all the numbers, and all the numbers are going to come up on screen as graphics. So if you can we have a lot of questions and limited time, so go on, please.
Yeah. As far as volume is concerned, it was in the fourth quarter mid-teens. The domestic business grew at a very healthy rate. There was a bit of a rollover in the exports order, and that is where the exports performance in the fourth quarter was slightly softer. But on an annualized basis, exports did well. And the next quarter as well as the next year looks very promising for both exports as well as domestic business.
So overall volume growth in FY26, Gandhar, if you can give us your expectation?
So you know this, we don't give annual guidance. We released our 5-year guidance in the last quarter, wherein we have guided that we'll continue to grow at 1.5x of the industry growth rate, which was a trend even in the last few years. And as far as the second business is concerned, FMEG, there will grow probably at 2x of the industry growth rate.
So, some indication of top-line growth will also help, Gandhar, because in FY25, you did 22,400 crores. The earlier stated sort of round figure target was 20,000 crores, and the company's already surpassed that. You've achieved that. So how much over this can you build? Volumes, we've given us some indication, but in terms of top-line growth, in terms of margins, some indication of what the year looks like?
Sure. So let me give you a business-by-business breakup. 84% of our business comes from cable and wire. There, the industry growth rate is expected between 1.5x to 2x of the real GDP growth rate. And on top of it, we believe that we would be able to grow at a 1.5x of the industry growth rate. So that this number, with some assumptions, likely to be in mid-teens. As far as FMEG is concerned, the industry growth rate in general is in high single digit or just touching the double digit. And there we believe that we should be able to grow anywhere between 1.5x to 2x of the industry growth rate, which means high teens. So that is how we are looking at. We have not given a number-specific guidance, unlike the previous transformational project, but that is how we can compute the likely numbers in.
Okay, so that's top line. Now, on the margin, I want to understand whether this extremely good performance at the end of Q4, I mean, your margins are at 14.7%. Q4 number is substantially higher than the full year FY25 margin number, which is, I think, closer to 13%. So the run rate of Q4, is that sustainable? Should we expect 14% kind of margins for the full year, FY26?
So, Surbhi, we gave our guidance on EBITDA margin as well in the last quarter. In the next 5 years, we believe that the EBITDA margin in cable and wire business should be between 11 to 13%. And if you see our annualized EBITDA margin for fiscal 25 was also close to 13.1%. We believe this is a sustainable margin. As far as FMEG is concerned, which is the second business, it contributes almost 7 to 8% to our top line. It was a loss-making business till December. In the March quarter, it turned out to be a profitable business. And there we believe gradually and slowly we should be able to get to 8 to 10% EBITDA margin in 5 years from now.
All right. Good morning, gentlemen. Good to see you all in. Just to reconfirm, FMEG, it's turned into the black. It continues in the black from here on, right? We continue to see profit numbers.
Yeah, so directionally, yes, it's quite possible a month here and there or quarter here and there. But as far as annualized numbers are concerned, looks like that we should be able to go back to the guidance which we gave earlier.
Okay, all right. I need to compliment you all because on the cables and wires business domestically, your market share has gone up, if I remember correctly, from late teens. It's gone up to around 26%. Even in the last year, I'm going by Jeffrey's note, they're saying that you've gained by around 100 basis points. So good going out there. Now the question is what happens from here on? You have two big players that are eyeing the industry. You all have been quite confident that the industry can absorb more number of players. What's your comment with regard to that? The Bidlas and the Adanis are eyeing the space that you all have been dominating. Where does your market share settle at? And what do you make of the competition that's coming in?
Basically, market is growing. And we are already working from last so many years. So unorganized market also is there. So I think so. Organized market is going to be remain same or little bit increase. Unorganized market will be difficult because everybody now, people are looking for a quality buy. So they will buy of the all organized sector. So anybody will come, demand is increasing much more in building construction line. So I think so it is not going to hit anybody, but at least in initially year when they come, 1 or 2% margin will go down, especially that wires. But within a coming time, who's going to give us service and all, and whose market already there, whose brand already established, I think so nobody will have a much problem in that.
So you believe that the industry is big enough. The ones that will lose out is the unorganized players, and the market is big enough to absorb two big players. But can you hold on to this market share? You'll have gained 100 basis points. What is the ballpark number you'd like to work with going ahead?
We are working for a network, and I think so we will remain that and definitely get a little increased market share.
Right, Gandharv, you want to give us a number, I think so.
Yeah, I
go
think
ahead.
you wanted to know number. That is why.
Yeah, go for it.
Yeah,
go for it.
The industry size, Nigel, is around 95,000 crore rupees as of now, give and take some number. And we believe that industry will continue to grow anywhere between 1.5x to 2x of the industry, GDP growth rate. So in 5 years, roughly, you can assume that this number is likely to be around 1.5 lakh crore, give and take whatever, some numbers. As of now, the unorganized is around 25-27%. We believe this number will materially go down in the years to come. And this is what we have experienced even in last 10 years. And any new player, including the large players like us, would continue to gain market share at the cost of unorganized. And that is where we are confident, that is what even Inder Bhai was alluding to, that market share gain will continue even in the years to come.
All right, not being specific with the number, but sounding confident. Very quickly, finally, Gandharv, since it's our first interview of the fiscal year, just give us an update. You have ongoing CapEx. How much money are you spending on CapEx? Just the cash position in the company. And would you think of raising equity capital at any point in time this year?
So we have around 2,400 crore rupees of cash in the books of the company as of 31st of March. As part of our project Spring Guidance, which is a 2030 project, we have given guidance of 6,000 to 8,000 crore rupees of capital outlay or capex in next 5 years. And all of this will come through internal accruals. We don't intend to raise any capital as of now. And we have also improved our dividend payout ratio. It was 30 rupees per share in the fiscal 24. And yesterday, the board has approved the payout of 35 rupees per share.
All right, Gandharv, we'll leave it there. Congratulations, and you guys have executed superbly. Best of luck for that. Mr. Jaisinghani, thank you, and good to see you as well, sir. Appreciate it. Well, I think, makes sense to just go back and take a look at what the market is doing for a brief bit. We're down 35 points on the index, so nothing. I mean, it's we turned into the green. We were up, I think, about 30, 40 points. We're down about 40. But I think the one turn which is not surprising is Radico. Radico was up 5%, 6%. It's down 1.5% now. It was what it was with that 5% surge, but it just didn't seem right because they will save on those 250 crores worth of import of bulk scotch. But what is not clear is, although the management did say they don't have to change pricing strategy as well, but it's too early. There will be a lot of foreign competition at better prices, lower prices, which will come in. So we'll have to see that. Let's just look at United Spirits as well. That was a bit of a clearer kind of a story, I think.
But here also negative, yeah.
There is a bit of a sort of pressure, which is actually coming through. But, purely on FTA, keeping everything else same, I mean, I think the better placed player, of course, is United Spirits. But the one which went up 5-6% was Radico. And I think that has promptly come down. This is also now turned absolutely flat. Ajay?
No, just because United Spirits, the problem is that volumes will improve, but there's a cap on the margin itself. Scotch at around 10%. And also there's that fear that since they're going to be gaining something, what about the domestic, the states out here? Will they put in some tax as well? So that's the fear. After starting off gap up, that one as well has hold up because it could help volumes, but there are other factors you need to take in mind, as Manglam as well pointed out earlier today.
Okay, that's on the Alcobev stocks. The rest of the market, again, looking at some red right now, 50 points lower. It's actually the big boys, L&T, Reliance. These are the kind of stocks that have seen some selling pressure in the last 15, 20 odd minutes. So let's just pull them up. There you go, L&T, Reliance. These are some of the bigger names that are pulling things down. Even ITC, for that matter, Lever. Some of them are turning now on the south side. We'll take a very quick break. But we'll come back on the other side. More earnings conversations also lined up. We'll have Alembic Pharma's management with us.
Okay, welcome back. Let's talk about the pharmaceutical space now. Alembic Pharma is the company in focus. Numbers have come through for the fourth quarter. Margins are lower year on year. Revenue is better than expectations of around 8% growth. Let's get more perspective going with Shaunak Amin, Managing Director at Alembic Pharmaceuticals. Shaunak, good morning. Great to have you with us here on the program. Thank you for your time. Prashant this side. Before we get to Alembic and the numbers and prospects business-wise, let me just quickly touch upon what is top of mind for many investors, which is the executive order which was signed by President Trump in the US, basically signaling a clear intention to onshore as much pharma manufacturing as possible. They're talking about reducing the amount of time to approve domestic pharma manufacturing plants. They're talking about increasing the fee for inspections of foreign manufacturing plants and highlighting, the 5 to 10 year plan for the greenfield build is unacceptable. They want to do it faster, much faster. So I just wanted your sort of thoughts on this in terms of what are the implications at an industry level and maybe then for Alembic as well if this were to happen. Go on.
Yeah, so I think when you look at this order, I think it's not necessary. You got to take it in the right perspective to start off with. It's not just in terms of generics, but it's also in terms of global pharmaceutical production that goes out of the US, of which the all patented products are a much larger share of this. So it's in context of that. So I think first you got to put the perspective correct from that point of view. It's not targeted towards generics per se. On this, it's still very early days. We're talking to our partners, our business partners in the US, as well as there's a lot of talk within the industry. I think at this point in time, it's too early to have a directional view on this at this point in time. So I think it's still early days, but like I said, I think it's going to be, I think the industry will have to navigate this as a whole. I'm sure I think both governments are talking to each other on this consistently. And I think it's still very early days to take any directional position on this for us at this point in time.
No, absolutely. Shaunak, it's not obviously targeted, as you said, towards generics specifically, and take that point. Two other things I want to point out. One is that this is not tariff related. This is more to do with what they call national security, onshoring manufacturing. Because I remember having this conversation with the management of Lupin. They said, well, we charge about 10% on $400 million worth of US imports. We import about $800 million worth of drugs from the US. We charge about 10% on about 50% of it. So it's not much we can do away with it. But this is not about tariffs and reciprocity. A second thing, cost of manufacturing in the US is by some estimates, 5 times, 10 times compared to what it is in India. So is it going to be feasible, Shaunak? Will this work out?
Like I said, I think it's too early. I'd rather not. Like I said, it's too early to make any take a directional view on this at this point to get into discussions of onshoring in the US or not. So like I said, it's too early for us to really come out with these statements. I think
I'm not asking for impact on you. I'm saying, is it prohibitively more expensive to make in the US?
I think
at a broad level.
I think it's prohibitively expensive to make anything in the US versus India. I think if you look at it from that perspective. So I think it applies to all sectors, not just pharmaceuticals. So I think your statement's correct.
So, okay, Shaunak, so now let's talk about the numbers as well. US has actually grown very well for you.
Yes.
Growth in the business is 20%. So I just want to understand whether, I don't know if pre-buying is the right way of calling it, but because there was this sword hanging on us about impending tariffs, was that an element that boosted sales, US sales in the fourth quarter?
No.
Or is it entirely organic?
No. So like I said, we've been talking to our business partners at this point in time in the US, the people we supply to. And at this point, none of them have given us a direction on whether they'd like to make some early purchases at this point in time. So all Q4 sales were pretty much, there was no stocking up at this point in time. The US sales was largely on a back of a stable volumes plus some good launches across all our product therapies.
Okay, so all things being equal, and as of now, if there is no prohibitive, adverse policy announcement from the US, what are you expecting from that business this year in terms of, revenue expectations, launches, margins, the general sense of pricing?
Yeah.
Just give us an outlook.
Yeah, so, honestly, we maintain the current view. I think we expect this trajectory to continue going forward. But as an organization, we don't give a forward guidance. You guys know about this quite well. So it's hard for me to project at this time. But I think at this point, if you could put it, I think the worst is behind us from 2 years ago in terms of price erosions. I think we have a good pipeline of launches lined up this year. Plus, I think we're getting stable volumes across the board. So I think we expect this directional movement to continue in the coming quarters.
Yeah.
All right. Hi, Shaunak. Good morning. Good to see you in. This is Nigel on this side. I went through one of our interviews that we had early in the fiscal, and you had promised a couple of things, and you more or less achieved that. On the animal health side, you were talking about, I think, a 20% growth. You're almost doing, I think, 100 crores per quarter.
Yes.
On this sort of a base, do you expect this momentum to continue? And also on the margin aspect, you said directionally you're heading towards 20% when we spoke last time around.
Yes.
For this year, what kind of a margin improvement can we look at in comparison to last year?
Yeah, so I think animal healthcare has been a real bright spot for us.
Yeah.
And we expect this to continue. It's, that there's no data per se in terms of market movement or general market trends on this, but I think we're quite confident looking at our base work to continue this growth trajectory. In terms of the margin movement, let me put it this way. I think the current margins were comfortable with this level. I think quarter to quarter margins do change based on product mix sales. And that's hard for me to project at this point in time. But like I said, we're comfortable at these margin levels, but obviously as the product mix keeps on evolving, we try to move towards a 20%, but I can't give any firm guidance on that at this point in time.
Got that. Shaunak, with regards to the India-UK FTA, does that benefit Alembic in any way?
At this point, not materially.
Okay, not materially. But you do sell into the UK?
As a very tiny percentage of what we sell.
Okay, I'm sorry to press just about the US-Trump thing one more time. The US FTA has officially shifted its policy. They are now talking about more, let me just sort of open this. They're talking about more unannounced inspections. And they're also highlighting that foreign companies have enjoyed a double standard given advance notice before facility inspections. American manufacturers, they're saying, were held to a more rigorous standard with no such warning. I mean, this is, and this is the US FDA kind of after the executive order.
Yeah.
Any thoughts?
So I think as a company, since, me and my brother have been running it, I think strong quality and regulatory compliance has been a hallmark of Alembic over the last 10 years. We have an excellent track record on this. Honestly, we welcome this move because we are committed to quality and, compliance totally on this. And that's one part of our key strategic initiatives, over a decade now. So honestly, we welcome this move.
Okay. All right, Shaunak, thank you very much for joining in and giving us perspective on the numbers and, of course, the environment in one of your key markets, which is the US. Back to stocks then, and let's see what the screen is telling us now. Range bound, the Nifty is down about 30-odd points. Mid-cap index is positive. The bank Nifty is positive. Let's go back to Mitesh for some advice then. Mitesh, on the index, what would you do today?
See, I've been avoiding trading the index, believing that we'll be ranged. But I think Sudarshan mentioned this buy on the opening gap down. I wasn't very sure. I think that responds very well. So congrats to him. But I still believe that we'll be in a range of about 24,500 to about 24,000 broadly, give and take a few points here and there. So trading has to be stock specific. I have a buy on Tata Motors. A buy with a stop below levels of 655 for targets of around 690. And the other stock which I like is Paytm. Strong price action taking place over there. And the weekly charts are very good over here. So maybe this will give a reversal, which will be interesting. So buy here with a stop at about 844 for targets of around 900.
No, absolutely. Got that. By the way, I have to point out that market breadth is negative. So it's about a little over 2:1 in favor of declines. But there's a fair bit of volume activity on the upside and lots of stuff moving around. CG Power, which reported and kind of fell about 6%. It came in the last hour yesterday. It's coming back up about 3.5% and a bunch more, which we will address. We continue to focus on Operation Sindoor and, of course, markets as well, implications therein on the other side. Coming back with a full panel.
Well, we continue to update you on the situation that has been developing overnight. Operation Sindoor being launched by the Indian Armed Forces, targeting 9 sites. These are 9 sites that are not affiliated to officially the Pakistan military or Pakistan civilian infrastructure. These are terror camps run by organizations like the LAT, the Jaish, etc., that have been targeted, and that is the statement that's come in from the Indian Armed Forces. We will, of course, hear from them for a more detailed view and perspective on Operation Sindoor in a short while from now. We're also at this point in time seeing reactions coming in from various quarters. You've seen Secretary Rubio as well as President Trump say that they are in dialogue with both India and Pakistan, asking for restraint. China has issued a statement as well. The UK has issued an advisory. So there are foreign governments responding to the situation. Israel coming out very unequivocally in support of India's operation, saying that terror should have no place to hide. Joining us now to understand the impact and the implications of Operation Sindoor, Manjeev Singh Puri, Adjunct Distinguished Fellow at Gateway House and former diplomat. Also with us, Deepak Bhojwani, the former Indian ambassador to Latin America. Gentlemen, appreciate you joining us here on the program. Mr. Puri, if I could start by asking you, Operation Sindoor launched overnight, targeting 9 specific sites in Pakistan-occupied Kashmir and in Pakistan. The significance of the operation and the significance of the sites that have been targeted by India.
Shireen, good morning to you. First of all, I must say, this was expected and it was the need of the hour. It was necessary for India to respond to Pakistan, which had carried out a heinous terror attack within India and disrupted a life for common people who have come from across the country. Absolutely right. Look, in my opinion, we have done the right thing. We have targeted areas which are associated with terror, which are associated with terrorist camps. We've been clear that we have avoided Pakistani civilian areas and even their military. We've done this in a precision manner and, as the press statement says, in a non-escalatory manner, which is why the rest of the world has said, look, you have a right to be able to take action against what was done about you. And that is very, very important in what we have stressed. For me, 2 places are particularly important, Bhavalpur and Muridke, because these places are not exactly next to the border where only these LATs, etc., are known camps, forward camps are there, but where fundamental bases are there. So what we've done is right. It gives a strong message to the Pakistanis and, of course, the world, as well as our public, that, look, we are strong, we are determined, and we will give a fitting reply if such kind of things are ever done on the soil of India.
Absolutely, a fitting response there from India. But Mr. Bhojwani, let me bring you into the conversation as well. As we just heard there from Mr. Puri, the significance of the sites that have been targeted as part of Operation Sindoor. But more importantly now, the response that we should be prepared for. Of course, it would be foolish to speculate on how Pakistan intends to respond. But given the political pressure, given the global pressure that is also at this point in time being exerted on Pakistan, we heard from President Trump as well as Secretary Rubio asking for restraint. Do you believe that Pakistan finds itself somewhat boxed in a corner today? They've also got that crucial IMF meeting coming up on the 9th, which will determine in many ways the economic future of Pakistan as well.
Shireen, I think Pakistan has been in kinetic response mode for the last perhaps 2-3 decades. Their sponsorship of terrorism is a known fact. That's why they're on the Financial Action Task Force grey list. They should be on the blacklist in many ways. But the fact of the matter is that they are getting financing from Saudi Arabia, which has given them, I think, billions of dollars in terms of deposits in their treasury. China, of course, which is financing the CPEC, and even other countries. In fact, now the IMF is talking to them also. So the Pakistan keeps slipping out of the net somehow every time we tighten the noose. But the problem is not that. The problem is that even if Pakistan was to develop economically, they have this base, this matrix of terror organizations, which is also fed. And as Ambassador Puri was implying, it's basically state-sponsored. So we have to address that issue. And what's happened, as we see through this century, at least 2008, 2016, 2019,
our response now has become asymmetric. Because while they do things clandestinely, we believe we have the right. And in fact, it seems that implicitly the international community has accepted that the right of hot pursuit and the right even of retaliation of the sort we've done today, we did in Balakot, etc., are accepted. And I think we should take our government at its word when it says we were not targeting neither civilians nor Pakistan military. If there is collateral damage at all, that's the fault of the terrorists who are housed there, and particularly deep inside Punjab. So I think what we've done could be called fairly surgical. Of course, the Pakistan Information Minister Tarar was claiming on BBC earlier this morning that they've shot down 3 of our planes and a drone. We've denied that. And there's a briefing to be done shortly by the MEA and the MOD. Let's see what we get from there.
Yes, we are awaiting clarity from the MOD as well as the MEA. And of course, since morning, the Indian side has refuted those claims that have been made by ministers of the Pakistan government claiming that the Indian Air Force planes have been shot down. That has been refuted by the Indian government so far. Ambassador K.C. Singh also with us. Ambassador Singh, appreciate you joining us. Both Ambassador Puri as well as Mr. Bhojwani there talking about the message that this Operation Sindoor sends out, as well as the global response and the global reaction. Do you believe that, given the fact that India has gone after very specific sites, 9 sites specifically, and has called its response non-escalatory, will make it harder for Pakistan to try and gather any kind of global support at this point in time?
I think globally it's an ideal time to be taking action like this because President Trump has created enough disruption and distraction. So Europeans are busy. Germans spent the whole of yesterday electing a chancellor. Canadian Prime Minister ticked off the president. So, all kinds of things are happening. But we must remember that Pakistan, we shouldn't just write it off because it's not a question. We always make a mistake between equating Pakistan with Pakistan's army. Pakistan's economy may be going downhill. Pakistan may be in economic distress. Pakistan army is in no distress. It's an army that controls the country, not the country controlling the army. And that's why that intemperate lecture by the army chief over 2 weeks ago, which was a signal that something was afoot and we should have been prepared for it. But I think what India has done, number one, having set a certain bar after Balakot, there's no way that India could not have reacted, and particularly a BJP-led government. It was expected that there will be a kinetic response. But we've combined it also with the putting Indus Water Treaty into abeyance, and also by using the gates of the rivers to control the water and then release them. So water has also become a weapon at a time that Pakistan requires. We can't completely stop the flow because they are run-of-river projects. But we can always reduce the flow and then increase it and cause disruption in Pakistan. So they have to take a call. And the other thing is that I don't think Indian planes, according to international reports, Indian planes did not cross the LOC or the Indian border. And that's why you'll see all the targets are within about 100, 120 kilometers of the border or the line of control. So what does Pakistan do? Now, Pakistan normally retaliates the same way. We've not attacked a military target. What target will they attack here where there are terrorists attacking Pakistan? We don't have terrorists attacking Pakistan. But the only problem is that they will go on a PR thing. Because in Muridke, their leadership is not there. LET is using a front of schools, hospitals, charitable organizations. We might have taken out their headquarters, but they'll make it a big case of innocents getting killed, civilians getting killed. Similarly, in Bahawalpur, Jaish-e-Mohammed is no longer. They were, in any case, they had moved out of there, but they would have emptied out. But nevertheless, they will have basic workers and headquarters. And I think an attack, even if it has limited loss in terms of life or buildings, a signal was important to send to these terrorist organizations that you can't hide in Pakistan behind charities and charitable organizations with the protection of the Pakistani army, and India will not come and touch you. Remember, even in during Balakot, we did cross the international border because Balakot is not in POK, but that was still in areas contiguous to Kashmir. This time, it's plain and simple. in the heart of Pakistan. Now, let's see what they do. And that is why I think India is expecting a reaction in the border areas within 100 odd kilometers. That's why we stopped the flights in Chandigarh and Rajasthan, Srinagar, and so on and so forth. And then India will have to take a call because you have to be ready for an escalatory response depending on what Pakistan does. Internationally, I don't see any problem. The world is distracted. And with Trumpian rules of the powerful deciding, if he's saying Russia did not attack Ukraine, Ukraine attacked Russia. He's got a history all topsy-turvy. He thinks that Pakistan was created 1500 years ago. So you're dealing with a person who's completely mixed up on history, current relations, international relations. So keep him humored. I think he'll keep out of it.
Gentlemen, very important insights coming in. I will request you to hold on for just a moment. Our colleague Parikshit Luthra is standing by. There is a MOD press conference expected shortly. Parikshit, what are you picking up at this point in time, and how long before we hear from the government?
Well, the Foreign Secretary Vikram Misri has arrived at the National Media Centre where that press conference is going. In fact, you can see his team just walking beside me right now. Having said that, there will be statements read out by the Army, Navy and the Air Force. The Foreign Secretary will be taking questions from the media. We believe they will also show maps of locations which have been targeted. Now, just to run our viewers through the significance of these targets, Bahawalpur, located around 100 kilometers from the international boundary, is the headquarters of Jaish-e-Mohammed. Murid K, 30 kilometers from the border opposite Samba, LET camp. Terrorists of the 26/11 Mumbai attacks came from here. You have Gulpur, 35 kilometers from LOC, Poonch, Rajouri. This is an area where the attack on Poonch on 20th April 2023 was perpetrated from. Then another LET camp in Savai, 30 kilometers inside Pakistan-occupied Jammu and Kashmir, Tangdhar sector. Bilal camp, which is a Jaish-e-Mohammed road launch pad. And LET, a Lashkar-e-Toiba Kotli camp, 15 kilometers from the LOC opposite Rajouri. Barnala camp, 10 kilometers from the LOC opposite Rajouri. Sarjal camp, Jaish-e-Mohammed camp, about 8 kilometers from the international border. And Mehmoona camp, 15 kilometers from the international border, which is a Hizbul Mujahideen training camp. What we've been told, that artillery guns and drones were used by the army to target 7 of these terror launch pads. Two launch pads, terror launch pads, which are 100 kilometers from the border, were targeted by the Indian Air Force. So we used precision munitions, and the Indian Army continuously saying that we acted with restraint. We did not target any economic or civilian or vital installation in Pakistan. This was targeted only at terror camps. Having said that, Pakistan has been resorting to very heavy shelling, artillery shelling, since 1 a.m. in the night. That was the time when the operation happened by India. We believe from sources that it lasted around 20 to 25 minutes. And immediately after that, Pakistan stepped up the level of firing and the kind of weaponry used in firing against India. Since then, artillery firing has not stopped. It continues. We believe 8 civilians have been killed and 2 people have been injured. These are the numbers coming from the Indian forces so far.
Well, thanks very much, Parikshit. We will, of course, come back to you as that press conference gets underway. Remember, as Parikshit was pointing out, a joint press conference, and we're just a couple of minutes away from that. But, Mr. Puri, if I could come back to you, one, of course, is what we're seeing happen in areas like Poonch, etc. And as per Indian Army sources, 8 civilian casualties being reported so far, 2 injured. What would you expect, at least along the border areas, as a response from Pakistan over the next few days?
Shireen, look, I have no doubt that the Pakistanis will respond in terms of shelling and so on and so forth. I am not so sure about their undertaking sort of surgical strikes or this kind of action within India, distance away from the border. I'll tell you why I think so. You know, there was a need for us to retaliate in the way we did, also in terms of the domestic political opinion. In Pakistan, the opinion which is being created there is that, you know, we are being unfairly targeted. They have detracted from the fact that they were the source of the terrorist act insofar as their own people are concerned. Secondly, let us not be we should be mindful of the fact that the world knows, the world has awoken to this fact, and they are talking in terms of de-escalation, etc. While they may be distracted in other ways, and Ambassador KZ Singh is absolutely right, the world is in a topsy-turvy state. But the fact of the matter is that we are interested in interacting with them. They have a certain worldview on this entire thing. And so the question of keeping everything measured would be important, which is why we have been very strong in stressing that A, there's been no targeting of civilians, even military facilities, only terrorists, and B, that it is not an escalatory move, but really simply retaliating to what they did, which was an act of terror. This is particularly important. Of course, the rest depends on the Pakistanis. If they escalate, I have little doubt that the Indian armed forces are more than prepared for giving them a bloody nose, which they will remember for a fairly long time. But in a sense, for the moment, the ball is in their court.
The ball is in their court. But, to the point that was being made by Ambassador Singh as well, Mr. Bhotwani, if I could get you to comment on that. The role of the Pakistan Army, as he said, the Pakistan government may find itself in a precarious fiscal position and its economy may be in dire straits, but the Pakistan Army finds itself in no distress. And especially given the kind of commentary that's been coming in from the Pakistan Army officials, do you believe that there is likely to be dissonance between what the government may wish to do and what the Pakistan Army intends to do?
We'll have to see how it plays out, but my feeling personally is that the government will have to go along with what the army says. There's far too much political pressure on them to look strong and to look like they intend to retaliate, even though they may not want to. Of course, they've got more pressure internationally than we do, and that was evident in the recent UN Security Council meeting, where we were not present because they're non-permanent members. They called the meeting, but from today's reports, it appears that they didn't get what they wanted, and a lot of members of the Security Council were questioning them on what they were doing and what they planned to do about LET operations. Now, basically, the Pakistani army is in control of that country. They've proved it time and again, despite the popularity, the apparent obvious popularity that Imran Khan enjoys, and the fact that he should have won the election and been elected. But they managed to keep control of that country against all odds. So they clearly run the show. And this, let's not forget, is an absolute military operation. So there's no question that the civilians will be told to take a back seat, and they'll be told that the army will see what it wants to do. Of course, there will be constraints on the army, not just international. Even the fact that today India is far better prepared than it ever was. Forget about 2008, even then in 2019. We won't be losing any aircraft, as we haven't apparently, if the government is to be believed. And I think the army will have to reconsider anything it might want to do overtly. But that doesn't mean to say they will not continue with their covert operations, which I believe will not stop. Now, that is the longer game. They have to play and bring such pressure to bring on them, to bear on them, that they will have to roll back their support of these elements. While we here in India, in Kashmir, I was there last September, the atmosphere was fantastic. Clearly, there are either cells or rogue elements who have been, of course, sponsored by the Pakistani side, who are doing this on our side, okay? And we also have to keep in mind that there's Pakistani infiltration too. So that, I suspect, is going to continue. And we'll have to play the long game too, but with increasing pressure on Pakistan. And the army will just have to live with it or give up.
Well, the military response aside, Ambassador Singh, what would you expect as we play this out over the short to medium term? What would you now expect as the next steps from India?
So the next steps are you await what Pakistan does. I don't think the Pakistani army will just lump it. They have to retaliate symbolically. There will be a kinetic response. You remember, even in 2019, they supposedly attacked an Indian camp, but didn't actually hit the camp. They hit the outskirts of the camp. So it was a symbolic attack. It's possible that the attack may be more symbolic than real. After all, they can't go after these civilians in the Jammu and Kashmir area. They claim they are their brothers. So where do you attack? You attack into Indian Punjab, Indian Rajasthan. What is the target you choose? There is no one here who is supporting terror in Pakistan. But just to give you an example of the control the Pakistani army has, just about a week ago, their DG ISI has been made their national security advisor. So he is sitting in the cabinet. So they've not even left it to imagination that they control it. The Pakistan PM had gone to the army headquarters for a briefing just a couple of days ago. So I mean, this is an open secret. This is not something which is new. And Sharif is in any case a very weak prime minister, because the real powerful figure is Imran Khan, who's been put in jail by the Pakistan army, and the price that the Sharifs are paying for being made the prime minister and putting the tiger in the cage is that they'll do exactly what the army wants. And we have an army chief for a change who appears very bigoted, appears very, very aggressive. And therefore, he'll have to now live up to his image. He'll have to take it to the next step. It's possible that if he's not able to play it well, he gets sacked. And that may be good for India and Pakistan. But at the moment, I think we'll have a chapter or two of this game yet left.
Yes, and of course, at this point in time, the Pakistani army chief, these are comments that are coming in from news agency Reuters, saying that 26 civilians have died and 46 have been injured on account of the Indian army action. There are also comments suggesting that the Pakistan defense minister said that if India halts operations, it will not take retaliatory action. But these are not verified comments. We're still trying to verify where this comment has been made and if at all it is factual or not. There is, of course, as much as military action, there is plenty of action online as well, social media abuzz at this point in time. So we need to verify those comments. But what Reuters is reporting, the Pakistan army chief is saying that the Indian action Operation Sindoor, 26 civilians dead, 46 injured at this point in time. Still waiting for the MEA and the defense press briefing. But gentlemen, thank you very, very much for joining us here this morning. We will, of course, come back to you for more insights as we hear from the government and bring you back on CNBC TV18. But many thanks for joining us here with your views and your perspective on how you expect things to pan out from here. That's the situation at the moment. Standing by for the MEA and defense press briefing. The stock markets at this point are trending lower, but along expected lines. We will come back after a very quick break. Stay tuned.